The FHA Streamline Refinance Program. What if you could lower your mortgage payment without spending a dollar and not worrying about the appraised value? That's the reason we're here today. Let's start with an introduction. My name is Dean Hartman, and I'm a mortgage veteran of about 25 years. Currently, I am the Chief Planning Officer at Continental Home Loans in Melville, New York. Continental has had its roots in the mortgage banking industry for almost a quarter of a century. And we're New York's largest FHA lender and one of the largest privately held lenders left in New York. We're licensed in more than 20 states, and we've been doing streamline refinances for years and years and years, literally thousands of FHA streamlines. So what are we talking about? The FHA Streamline Refinance Program is a program where if you have an FHA loan and you qualify, we will lower your interest rate and do it where we pay all the closing costs. There is no out-of-pocket expenses for the borrower. Now, what is the FHA? Most people think the FHA is a lender, but in reality, the FHA is a federally owned insurance company. They insure lenders against default. If you don't make your payments on an FHA loan and we have to foreclose and we lose money, we apply to make a claim against the insurance policy that's held by the government, and they reimburse us for the money. That gives us the ability to give a little bit looser guidelines as far as income and credit and where your money comes from. That's what the FHA is. They are an insurance company, and they collect two insurance premiums. One is called the upfront mortgage insurance premium, which is currently at 2.25%, and that number is added to your loan amount and in essence financed into your 30-year mortgage. And then there is a monthly insurance premium, which is added in monthly until the loan to value gets down to a certain level. So the FHA collects insurance premiums. Those premiums are put into a pool, and if and when there are claims due to a default or a foreclosure, the FHA uses those premiums to reimburse lenders. So why would they offer a program like this where, in essence, we lower your payment by lowering your interest rate at virtually no cost to the consumer? Well, the reason is because they're an insurance company, they know that a lower rate means that it's easier for you to make your payments. When it's easier for you to make your payments, there's less of a chance you're going to default on your loan, less of a chance there'll ever be a foreclosure, and less of a chance that there'll be a claim. So in an FHA Streamline Refinance, there are really three winners. You win because you get a lower payment. The FHA wins because they collect a little bit more insurance premium and they lower their risk. And the lender, like Continental, will create some income and fees from their loan that makes them a profit. So everyone wins: consumer, the lender, and the FHA. So how does it work? Well, step one is you have to qualify for this loan. It used to be that on the FHA Streamline Refinance, it was somewhat automatic, but in this case, going forward, we need to qualify a borrower. We're not going to worry about the appraisal. Again, recognize the FHA is already on the risk. If your home is worth X and your mortgage is Y, they already have their insurance risk based on the loan to value, so the appraisal is not an issue. But they do want to make sure you can make your payments. So we are going to qualify you virtually the same way we would for any other loan. We're going to look at your income. So we're going to ask that you submit a month of pay stubs, W-2s, tax returns, maybe a profit and loss statement if you're self-employed. We're going to make sure that you can afford this loan. Second, we're going to review your credit. Most programs require a minimum of 640 FICO scores. We do have an option that goes down to as low as 620, but you do need to have made excellent mortgage payments. As a matter of fact, there can be no more than one 30-day late in the last 2 years and no 30-day lates in the last 6 months. So now you could have paid on the 16th of the month. That's not 30 days late. You might have a late charge to the bank, but as long as you haven't skipped a month and your FICO score is in line, you're pretty much okay as far as credit goes. Occasionally we're going to look at assets because having money in the bank will give us the ability to be a little more flexible for credit blemishes or for tight income ratios. You won't necessarily need assets to come to the closing table, but it's a good comforting thing for the underwriter to approve your loan. Excuse me. There's one other thing. Your loan amount will be an issue. Loans up to $417,000, really not a problem. Loans over $417,000 to $729,000 do require a higher FICO score, a minimum of 640 and a minimum of 12 months payments. So you will have had your loan for at least a year in order to do the Streamline refi if your loan amount is above $417,000. There's another calculation we're going to do called net tangible benefit. The FHA and really no lender should want you to refinance unless there's a benefit to you. Right? Just lowering your interest rate may not be if. So the way the program calls for your net tangible benefit to be defined is your mortgage payment must go down at least 5%. So if your total mortgage payment right now is $2,000, 5% would be $100. So you'll really only get approved for this loan if your payment goes down to $1,900 or below. So that typically requires anywhere from 0.5 to 0.75% in drop in interest rate. After you're qualified, we're going to start documenting your file. We're going to update your title policy. We're going to make sure your homeowner's insurance has the right coverage and that we're named as an insured. So during the qualification phase, we're going to ask you to fax us your pay stubs, your W-2s, your bank statements. We're going to run your credit to verify all those other things. Once we say it's a go, then we want your deed, your survey, a copy of your homeowner's insurance, all the supporting documents so that we can move your file towards the happy ending, which is a closing. At the closing, you will not have any closing costs. Those will all be paid for by Continental. But you will be bringing your mortgage payment to closing. Now, on an FHA loan, you have to pay, whenever you pay off your FHA loan, and we're going to pay off your old one and give you a new one, you pay the entire month's worth of interest. So we look to close these loans somewhere after the 21st and before the 25th of every month, because you have a 3-day right of rescission. You're not bound by the closing until those 3 days for you to look over the paperwork and make sure you're comfortable with it passes. So we're going to close between the 21st and the 25th of the month, and you're going to have to bring that next month's payment. So if we close in September 21st, you're going to be bringing your October 1st mortgage payment to the closing table. So you need to prepare for that, because you may have only paid your September mortgage payment on September 15th, and here we are on September 21st asking you to bring your October 1st mortgage payment. The reason we do that is that a bank has to earn its interest. So when you make your October 1st mortgage payment, you're really paying the interest for having borrowed the money during September. So if you bring your October 1st mortgage payment, we have enough interest to pay your old bank off, the principal that they're due and whatever interest you may be due, and then we have enough money left over to start your escrow account. So at closing, you must bring that next month's mortgage payment. So budgeting may be a factor for some borrowers who go through the Streamline refinance. In addition, we will be setting up your escrow account at closing to pay your taxes and your homeowner's insurance, just like you do with your current loan. Now, for the most part, most people don't have, they have money with the last bank. They don't have money to bring to the closing table. So what we will do is give you an interest-free loan, because we know that by law, your old bank will have to refund the money that's in your escrow account within 30 days of closing, or their payoff. So if you close on the 21st and we pay them off at the end of the month, by the end of the next month, right at the end of October, you're going to get a check back from your current loan holder that reimburses you for whatever was in your escrow account, which should be pretty close to what we're going to need in the escrow account. At that point, you will just take the check from your old bank and then write a check to us to cover it so that your escrow account is made full. We'll be giving you the money that should be in your escrow account, in essence, as an interest-free loan. As long as you pay us back within that 30-day period, we won't charge you any interest. That's a big advantage and one unique thing that we do here at Continental. Now understand that this is a limited time offer. The FHA is changing the mortgage insurance premium structure effective October 4th. After that, your monthly insurance premium is going up from what is right now 0.55 to as high as 0.9%. That's in essence almost a 3/8 increase in your interest rate. So we need to get these loans in processing by the end of September so that we can live under the old mortgage insurance premium structure. structure so that this makes sense, so that you save enough money on a monthly basis to pass that net tangible benefit test. So don't dilly-dally. Rates are as low as they've ever been, and they can't go much lower, and so there's no benefit to waiting. Get in, make sure you stay within the current mortgage insurance premium structure, and get closed so that you can start saving sooner rather than later. I want to give you a quick example. Let's assume we have a borrower with a $300,000 loan that they took out for 30 years at 5.5%, and their real estate taxes were $7,200. Their principal and interest on that loan is just over $1,700. Taxes are $600. Their homeowners insurance are $100, and that mortgage insurance premium is $138. So their total mortgage payment right now is $2,539. What we want to do in the Streamline Refinance program is give them that same $300,000 loan with a 4.75% interest rate. Their taxes, homeowners insurance, and the mortgage insurance premium all stay the same. So the only real difference is that principal and interest payment, which goes down from $1,701 to $1,566, making the total payment $2,404. Overall, that's $135 a month in a savings. What could you use with an extra $135? You compound it and look at it, it's over $1,600 for a year, and if you keep this loan for the 7 years that most people keep their homes for, you're looking at an $11,000 plus savings with no out-of-pocket expenses. It's a great program. You should take advantage of it. So what's the next step? Next step is we have to go through that qualification phase. So we need you to fax your documents to us. We need you to fax a month of pay stubs, 2 years tax returns, and your W-2s. And we need 2 months worth of bank statements so that we can look at your assets. After that, we need you to start assembling your other paperwork, because once you're qualified, we're going to need a copy of your deed and your survey, copy of that declarations page of your homeowner's insurance so that we can see that you have sufficient coverage and who your agent is so that we can call them to make sure that they switch the policy to Continental from your current bank. We'll also need a copy of your recent mortgage statement. We're going to look there to see what your current payment is, and we're going to contact your current bank to get a payoff letter. We also will need your FHA case number. Most people find that on the first page of their mortgage, not their mortgage statement, but the actual mortgage they signed at closing. So you can either fax us the front page of your mortgage or just send us that number. I want to thank you. Again, this is Dean Hartman from Continental Home Loans, and really offer to you to ask me any questions you have. You can either email me at dhartman, H-A-R-T-M-A-N, at cccmtg.com, or call me directly on my line in the office, 631-390-6116. My eFax number, as you can read, is 631-390-6117. Now, if you're already working with a loan officer here on our team at Continental and they directed you to watch this video, certainly go back to them, send your information to them, the qualification information, any question you have, go back to that loan officer. But if you're not already working with a loan officer, send me your stuff and I will get somebody to call you back. And if you don't have a fax number for the loan officer you're working with, fax all the documents to the same e-fax number and just reference the name of your loan officer so that we can make sure that they get the documents. Again, if you have any questions, do not hesitate to call and or email. More importantly though, do not wait. This is a limited time offer, and I know because I've done this 1,000 times that most people's answer is, this sounds too good to be true. And I recognize that. But let me assure you, this is that good. It is almost too good to be true, but it is true. We will not ask you for money. We will not ask you to, let an appraiser into your home. We are ready to qualify you and process your loan and get you to the closing table in a very short time so that you can take advantage of this program. Thank you and have a nice day.